Welcome to our YouTube channel, where we dive into the world of finance and investments. Today, we're going to explore a topic that has been making waves in the financial spectrum: the surging gold prices and how they're reshaping the landscape of gold loans. We'll be delving into the current gold market scenario, the rise in gold loans, and what it means for you as a borrower. We'll also be taking a close look at the terms surrounding gold loans and why understanding these could be crucial for your financial journey. And of course, we'll touch on some cautionary measures every borrower should consider in the face of fluctuating gold prices. So, whether you're a seasoned investor or someone just dipping your toes into the realm of gold loans, this video promises to provide some valuable insights. Stay tuned as we unravel the impact of rising gold prices on your gold loans. The gold market is currently buzzing with activity. The gleam of this precious metal is shining brighter than ever, with its value reaching record highs. On December 11, 2023, MCX Gold traded at a staggering 62,197 rupees per 10 grams. This is not just a figure that's impressive in its own right. This heightened value of gold has sparked a significant shift in the financial landscape, particularly in the realm of gold loans. With gold's value skyrocketing, it's not just those with gold jewelry in their possession who are smiling. Lenders are finding that the increased value of gold means borrowers can get more bang for their buck, or in this case, more rupees for their gold. The result? An unprecedented increase in the uptake of gold loans. The Reserve Bank of India's recent clampdown on unsecured lending is another factor contributing to this rise in gold loans. Between September 2020 and September 2023, gold loans shot up from 46,791 crores to a whopping 97,660 crores. Meanwhile, approximately 14% of the 27,000 tons of gold owned by Indians globally is now pledged as collateral for loans. Financial institutions are offering loans of up to 75% of the value of the gold, with interest rates varying based on factors such as repayment frequency and the type of gold offered as collateral. But what does this surge in gold prices mean for gold loans? Let's dive deeper. As gold prices rise, so does the value of gold loans. This sentence encapsulates the financial landscape we're currently witnessing. In the last 3 years, from September 2020 to September 2023, the value of gold loans has soared from 46,791 crores to a staggering 97,660 crores. That's more than double the value in just 3 years. But what's behind this dramatic increase? There's more to it than just the rising price of gold. You see, the Reserve Bank of India has been cracking down on unsecured lending. This has led many to turn to gold loans, which are secured against the value of the borrower's gold. Now let's put this into perspective. Globally, Indians own about 27,000 tons of gold. Yes, you heard that right. 27,000 tons. That's a lot of gold. And what's even more fascinating is that approximately 14% of this gold is pledged as collateral for loans. That's nearly 4,000 tons of gold. Banks and other financial institutions are, understandably, eager to get in on this action. They offer loans of up to 75% of the value of the borrower's gold. The interest rates vary based on factors such as repayment frequency and the type of gold offered as collateral. This trend shows how the fluctuations in gold prices directly affect the gold loan market. And as we continue to see gold prices rise, we can expect the value of gold loans to rise along with them. But as always, it's crucial to remember that the market can be unpredictable, and what goes up can also come down. The importance of understanding the terms of your loan and the potential risks cannot be overstated. Now, it's crucial to understand how gold loans work. In essence, gold loans are a form of secured lending where you pledge your gold jewelry or coins as collateral in exchange for a loan amount. But how exactly do financial institutions determine this loan amount? Well, banks and other lending institutions typically offer loans up to 75% of the value of the gold you pledge. This is known as the loan-to-value ratio, or LTV. It's important to note that the LTV is based on the current market value of gold and not the purchase price. The higher the LTV, the more money you can borrow against your gold. But the loan amount is not the only factor to consider. Interest rates come into play too. These rates can vary based on a number of factors. One such factor is the repayment frequency. If you choose to repay your loan in smaller, more frequent installments, you may be offered a lower interest rate. On the other hand, if you opt for larger, less frequent repayments, your interest rate may be slightly higher. The type of gold you offer as collateral can also influence the interest rate. For instance, gold jewelry studded with precious stones may fetch a lower loan amount and a higher interest rate compared to pure gold. This is because in the event of a loan default, it's easier for the lender to sell pure gold than jewelry. Lastly, it's important to understand that the conditions of your gold loan can change if gold prices fluctuate. If the prices increase, you may be eligible for a top-up on your loan. Conversely, if the prices decrease, you may need to pledge more gold or pay a part of your loan in advance. Understanding these terms will help borrowers make informed decisions. So, before you sign on that dotted line, make sure you've done your homework and fully understand the terms of your gold loan. While gold loans can be attractive, borrowers must exercise caution. Gold loans have certainly become a go-to option for many, thanks to the rising gold prices and the ease of obtaining such loans. But, like with any financial decision, it's prudent to tread with caution. It's especially crucial when you're considering a top-up gold loan. A top-up gold loan may seem appealing, as it offers additional funds over your existing gold loan. However, it's not without its risks. The key risk factor in this scenario is the volatility of the gold market. Gold prices are influenced by a myriad of global and domestic factors and can fluctuate quite significantly. Now imagine this. You've taken a top-up gold loan when the gold prices are peaking, but what happens if the gold prices fall? You may find yourself in a position where the loan amount exceeds the current market value of your gold. In such a case, your lender may ask you to provide additional security to cover the shortfall. This could mean pledging more gold or providing some other form of collateral. This risk is not just limited to top-up loans. Any gold loan can potentially put you in a similar situation if the gold prices take a downturn. Hence, it's crucial to keep an eye on the gold market trends and make informed decisions. Before you jump into a gold loan, it's also advisable to understand the terms and conditions thoroughly. Pay particular attention to the loan-to-value ratio, interest rates, and repayment terms. Don't hesitate to ask your lender if you have any questions or doubts. Remember, knowledge and understanding are your best tools when navigating the financial world. In conclusion, while gold loans can be a lifeline in times of need, they're not without their risks. It's always wise to stay informed and prepared for any market fluctuations. In conclusion, rising gold prices have a significant impact on gold loans. This surge has resulted in borrowers getting more value for their gold, leading to a rapid increase in gold loans. The Reserve Bank of India's measures against unsecured lending have further propelled this rise, with gold loans swelling from a substantial 46,791 crores in September 2020 to a whopping 97,660 crores in September 2023. The terms of these loans are fairly straightforward, with financial institutions offering up to 75% of the gold's value. However, the interest rates can vary, influenced by factors like repayment frequency and the type of gold offered as collateral. Borrowers, it's crucial to tread with caution, especially when considering a top-up gold loan. Remember, you may need to provide additional security if gold prices fall. Be wise and make an informed decision. Thanks for watching the video. Please subscribe to our channel to stay updated on the latest trends in finance and investment.